Welcome to this explainer. Okay, if you've ever stared at a flurry of automated trades and just thought, wait, why on earth did my bot just make that exact move? You're definitely in the right place. Today, we're demystifying the Voden trading engine. We're going to open up the hood and give you the exact mental model of the logic that's turning the gears inside the system.
Let's quickly hit our roadmap for today. We're going to meet your trading engine, break down dry run versus live mode, look at auto tune, which is your regime engine, then check out quartermaster for managing exits. After that, we'll cover why clean history is so crucial, and finally, get you set up for your very first successful run.
All right, part one. Let's meet your trading engine and see exactly how Voden makes decisions on every single candle.
You see, whenever a market candle closes, the bot doesn't just blindly jump into looking for a new trade. It follows a really strict hierarchy. First up, the quartermaster runs a quick pre-check for take profit or stagnation exits. Then, it checks the hard stop floor, looking out for an emergency loss cut. It is only after the position survives both of those checks that Voden actually moves on to evaluate new exponential moving average, or EMA, signals. Basically, protective and profitable exits will absolutely always take priority over getting into something new.
Moving right along to part two, dry run versus live mode, and what we call the illusion of the order book. So this is probably the biggest source of panic we see. You boot up dry run, the P&L instantly goes negative, and your heart just drops because you think, oh no, the strategy is completely broken. You look at a string of underwater trades and assume the bot is malfunctioning. But the reality of what's happening under the hood, it's actually a completely different story.
Here's the real deal. It's the illusion of the order book. In live mode, Voden is smart. It naturally avoids bad trades by using limit or maker orders. If the market suddenly rips higher, well, the order just expires unfilled. No harm done. Dry run, on the other hand, uses instant synthetic fills. It blindly catches literally every single trade the second a signal fires because there is no real order book to say no. That means it ends up taking all those bad trades that live mode naturally dodges.
You really got to remember that dry run is a testing sandbox. It is not a crystal ball for your profits. Auto-tune is totally disabled, so there's zero adaptation happening. There's no slippage, and it never actually touches Coinbase. You use dry run for one thing, to validate that your signals are firing properly. Never use it as a one-to-one forecast for how you'll do in live trading.
Okay, on to part three. Let's talk about the brains of the operation. Auto-tune, the regime engine. Think of it as your live sound engineer constantly adjusting the dials.
Auto-tune is this incredibly dynamic engine that shifts your parameters within safe boundaries to keep you perfectly aligned with whatever the current market regime is. Instead of relying on rigid, hard-coded rules that totally fall apart when the market shifts from a strong trend to just choppy nonsense, Auto-tune has your back. It recalculates its entire strategy every 3 hours. And you get to dictate the baseline for this adaptation by picking a starting profile. Are we in a highly volatile market and you want faster entries? Go aggressive. Want to wait for a bit more confirmation because things are stable? Choose conservative. Or just stick to the default balanced profile. But what does that math actually look like?
Well, take a conservative profile, for example. It forces the bot to wait for 5 consecutive confirming closes before buying in. An aggressive profile, that only waits for 3. Auto-tune grabs these baselines and incrementally tunes the execution sensitivity based on how each specific coin is actually performing. If a coin is winning over a 3-day window, Auto-tune bumps its maker offset up. If it's losing, it drops it down. It is constantly making these micro adjustments for you in the background.
All right, part 4. Let's introduce the muscle. Quartermaster, your ruthless exit manager who relies purely on math, not emotion.
What makes Quartermaster so effective is that its take-profit math is based entirely on your blended cost basis, not just your last entry price. If your bot scales into a position with multiple entries, Quartermaster looks at the weighted average of that entire position, and yes, that includes all the entry fees to calculate your true profit target. And it works as part of a perfect tag team with the EMA min-profit gate. The EMA gate is there to block exits that sit below your break-even floor, which prevents you from taking unnecessary whipsaw losses in choppy markets. Meanwhile, Quartermaster forces a market exit the second your target profit is hit, regardless of what those EMA trend lines are doing. So one system protects your downside, while the other literally guarantees your upside.
But Quartermaster isn't just about selling winners. It also acts like a janitor, dumping stagnant positions to clean up your portfolio. Plus, it can actually delay gratification. If you enable the Respect MACD feature, Quartermaster will hold off on a take-profit exit if the upward momentum is incredibly strong. It's smart enough to say, hey, we hit the target, but this rocket is still flying, let's hold on for a minute. Now, listen up, because this is a really vital operational warning. You absolutely must set your target limits before you wake up the Quartermaster. Think about it. If you turn the manager on while the target is still sitting at some tiny default number, any position you have that's currently in profit will be instantly market sold on the very next candle close. Always set your targets first and then turn the manager on.
Moving to Part 5, the importance of clean history. Because when it comes to automated trading, data integrity is quite literally everything.
Let's say you've been offline for a week. You're going to need to widen your look-back hours window. When Voden boots up, it looks back through your exchange history to reconstruct exactly what you own and what you paid for it. If your purchase happened 10 days ago, but you only tell Voden to look back 7 days, well, it's not going to be able to find your real entry price.
By default, 24 hours is the absolute minimum enforced lookback. We do this to prevent the dreaded phantom exit, which is when Quartermaster panics because it sees a zero-cost basis. If Voden can't find your actual entry price, it has to fall back to a proxy using the last known close price. That keeps the bot running, sure, but it means your profit and loss tracking for that specific asset is just an approximation until you fully close the position. Another huge tip: avoid stopping and restarting the system mid-trade. Doing that completely wipes out the bot's short-term indicator memory. Your holdings are perfectly safe, but when Voden restarts, those EMA lines recalculate from scratch based on a historical backfill. And the danger there is that those fresh EMAs might instantly cross into a bearish signal, triggering an exit at a loss before the coin even has a chance to recover. So, whenever possible, just let the bot run uninterrupted.
Finally, Part 6, your first successful run. Let's get you set up for algorithmic success.
To make sure Voden tracks your data accurately from trade number 1, you really want to start with a perfectly clean slate. The best way to do that? Go ahead and cancel any old limit orders you have open on Coinbase, clear out your manual holdings, or just make a new dedicated API portfolio, and then use the Delete History tool to wipe away any old testing data locally. Once you've done that, just hit Start, step back, and let that very first closed candle trigger the automated flow.
So, you now understand the distinct rules of dry run, the adaptive genius of auto-tune, and the ruthless, emotionless math of the Quartermaster. The whole system is engineered to handle the heavy lifting for you. The only question left is, now that you know exactly how the machine thinks, are you finally ready to let algorithmic logic take the wheel, or are you going to keep trying to outsmart the market manually?